Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay with me, Nigel D'Souza and Rima Tendulkar. And guys, thank God it's Friday.
Well, indeed, but we've got a big trading session to get through and then you get into the Christmas week. So hopefully there is some cheer. It's been missing for the last few trading sessions.
Indeed, it's been a sluggish week. The Nifty went and saw levels of 26,050, went down to 25,700. And ultimately, where we closed yesterday was exactly at that 50-day moving average of 25,810. So let's see where we go from here. Global cues are upbeat, but the BOJ decision is awaited.
Before the BOJ decision, I think one thing I will say that maybe we can learn from President Trump. We need those executive orders that give those extra holidays. So now he said that the US government is going to be shut one day before Christmas, that's the 24th, and one day after, which is 26th. We need those orders for Diwali, for Christmas, for New Year's, for our market for sure. But
At least
anyway.
1st Jan. Anyway,
so it's a long list.
Standing complaint.
It's a long list, but we could do with some of that even around Diwali, absolutely, and Christmas. All right, but let's get to, of course, the action of the day, and the action actually was on the positive side. Finally, Wall Street managed to snap out of its slump. Yesterday, we had all the indices close higher. There you go. I have them on the screens. And actually, the NASDAQ, the tech part of the market, pulled back rather smartly thanks to Micron. And I'll come back to that in just a bit. The other major positive catalyst was the CPI report for November, which was not hot. In fact, it was, can I say, cooler than expectations. So there you see November CPI. The headline number came in at 2.7% versus estimates of 3.1%. And even the core CPI number at 2.6% versus expectations of 3%. Now, there are the naysayers who are saying the data has not been calculated properly because there was government shutdown and they didn't have all the parameters. So there was, some bit of estimation involved. We'll see. We'll see what the next report says. But for now, this was very well received by the market. Not just the equity market moving higher, bonds are moving higher. Yields fell between 2 to 3 basis points across the entire range, 2-year, 10-year, and even the 30-year bond. The 10-year is closer to about the 4.12 handle, 4.1213 handle. The dollar eased off a little bit as well after this number came in. It is, again, getting the market to believe that the Fed indeed will be able to deliver more rate cuts because inflation is very well behaved in the U.S. Now coming to the AI trade, which revived in a big way thanks to Micron yesterday. Micron shares, by the way, they closed up 10%. In intraday trade, they surged as much as 16% higher because not only has the company delivered on estimates in the quarter that they were reporting for, they're saying that there is plenty of demand for AI chips. In fact, Micron's CEO, Sanjay Mehrotra, said that the memory market is expected to remain tight even beyond 2026, and that really inspired confidence. And it gave enough reason for all the investments that companies, including Micron, are putting into chip-making capacity. Speaking of Wall Street action, actually, Nike shares were very interesting because they fell 10%. They managed to meet expectations in the reporting quarter, but the outlook is a little tentative. And the China numbers for Nike are not looking good. Their sales are declining in China, Greater China. Plus, Nike has acknowledged that these tariffs are leading to some margin erosion, and that the market did not like. So that was something interesting to focus on. Let's talk about central bank actions. So while the market is hoping for more Fed rate cuts coming forward, the cut was delivered by the Bank of England. ECB, however, managed to stay on hold. But today, as Rima is also saying, it's all about the Bank of Japan. If the BOJ hikes 25 basis points, as is a wide expectation, interest rates in Japan will be at the highest level they've been in 3 decades. So that's the big watch point. Now, for us, the market is still in a very, very narrow range. Only 400 points on the Nifty, 28,700 on the downside, 26,100 on the upside. No breaking out. But some silver lining. In the cash market, at least, FPIs have been buyers for 2 days in a row. Yesterday's buying was about 500 odd crores. It's not much, but we'll take it with both hands. Whatever we get, given the amount of $18 billion worth of selling we've seen this year. Nigel?
Well, that's right. Just to put some of those cues on the table, crude and the dollar index, they are well behaved. From an India market perspective, an emerging market perspective, That's pretty good news. So those global indicators are in line. The FIs and the DIs, they were both buyers, which is actually good news. So the institutional part of flows, no worries out there. In yesterday's trade, there was some unwinding of positions, some lightening getting into the holiday week. So you had the Nifty as well as on the Nifty Bank. There was some unwinding of, open interest, some lightening ahead of the holidays. Well, what do the FIs do, though, on index futures? Not too much, both on the long as well as on the short side. And the short positioning continues at around 92%, which is the highest we have seen in the last 2 months. But otherwise, the data coming in from the FIs is more or less positive. You want shorts in the system, that wish has been granted. And if you look at the other positioning, if you look at stock futures, yesterday, in fact, they bought more longs. They added more longs than shorts. If you're looking at the options data, well, they bought some calls. And on the writing side, they wrote an equivalent amount of calls as well as puts. So that's what the FIs did in the F&O market. Besides being short on index futures, the overall data points are not too bad. Moving to the levels that you're looking at on the Nifty, well, the options are fairly active. So in yesterday's trade, there was some signs of writing at lower levels. 25,700 put, 25,750 put, fair bit of open interest built up out there. And you see the premium as well, they declined in yesterday's trade. Which brings us to the levels. Going by these strikes that were written, this is the important mark. 25,650, 25,700. If this level does hold out, you'll be fancying your chances that maybe, in fact, we could see some kind of a relief rally if we go closer to those levels. On the upside, the 26,000 becomes a bit of a resistance mark because that's where the 20 DMA is. And we've seen in the past, 26,000, 26,050. That level has been getting rejected. Just one more point, besides the levels, besides this 350, 400 point range, on a day-to-day basis, you have been seeing that the Nifty has been making lower highs. And not just that, it's been making lower lows as well. So for today's trade, actually, you'll want it to break that. You'll want it to make a higher high and protect yesterday's low as well. So break that trend that we have seen all through this week. Moving to the Nifty Bank, well, in yesterday's trade, it went to the 20 DMA. It couldn't conquer that. So that becomes a bit of a resistance mark on the upside. On the downside, the 50 DMA, that's a reference point at around that 58,400, 58,500 odd mark. The tech index as well will have a role to play today because Accenture came out with its set of numbers and there's no big change in discretionary demand, and the management reiterated the overall spending remains consistent with last year. So no big uptake in terms of spending. I'll keep an eye out on the tech index because that has been outperforming in the last 2.5 months after underperforming for the majority of the year. So the Bank of Japan, that's going to be the big cue if they do hike rates, but they don't sound very, very hawkish. Global markets actually will believe there's a bit of a relief on the cards because the positioning is that you see a rate hike and maybe you don't hear a very dovish sounding Bank of Japan.
Well, indeed. So we'll have to wait for the press conference by the governor of Bank of Japan because it seems like a 25 basis points rate hike could be priced in, widely expected. But the question is on the future guidance. Does he signal further rate hikes, maybe in April, June? What will the terminal interest rates look like? So if he delivers a hike without an aggressive forward guidance, maybe the street looks at it positively. So that's the big cue. Global markets are watching. And back home, the Shriram Finance Board meeting. And secondly, ICICI approved listing. That's scheduled for 10 o'clock and it's expected to be a good debut. Let me also tell you what interactions we have lined up for you on our show today. Let's start at 8:45. Siddharth Khemka, Motilal Oswal Financial Services joins in for some fundamental stock talk. 9:20, Sandeep Tandon of Quant Mutual Fund will be our market master for the day. 9:35, the management of Hitachi Energy India joins in to discuss the outlook for FY26. Following that, we'll chat with the management of KFin Technologies at 9:45. Towards the end of the show, in our special segment, it's the economy. Lata speaks to top 3 economists on the outlook for economy in 2026. All right, here's what we'll do. Get into a break. On the other side, we'll talk about the stocks that you need to have on your radar this Friday morning. CNBC TV18's list of top stocks. Welcome back. Yesterday was a bit of a subdued session. The Nifty ended with a 50-day moving average of 25,815. But this morning, Asia is fairly upbeat. We've got a rally of more than 1% coming through on the Japanese markets, the Taiwanese markets, following the rebound on Wall Street, where Nasdaq was up close to about 1.5%. Hang Seng too opens up in the green, up nearly 0.6%. Let's invite Daniel DiMartino, CEO, Chief Strategist at Q Research, here with us on the show. Thank you very much for joining in. Well, we would have also liked to chat with you once we got the BOJ decision and what the forward outlook is going to be. But just going with some assumptions, we get a 25 basis points rate hike from the BOJ, but the governor does not sound very aggressive with respect to future hikes. It's a little ambivalent. How will the market react? Do you think we'll see a relief rally because this has been such a widely anticipated hike?
I actually do. The market has been looking for, this final first hurdle to be crossed. And I think that that's finally going to happen. But again, it's the go slow that I think will be very placating for the market. You see, you're flashing up on the screen right now that futures are up in the United States. So I think that there's something of a celebration going on because as Japan has for the last several decades, I don't think that there's going to be any abrupt moves, anything to disturb the markets. And given what we saw with the consumer price index today in the United States, I think that there's a lot of room right now for markets to celebrate.
What's the outlook for U.S. markets going into 2026? I mean, U.S. has been this one big AI bet. But quite a few of the economic indicators outside of what's happening with respect to the AI infrastructure capex spend are still a bit muted, not as convincing. So what happens to the U.S. markets? Do you think the AI momentum continues, money still continues to flow into U.S., or there is a little more diversification?
So I think that you're being very diplomatic here because I think that outside of the AI trade, there's not very much going on with the U.S. economy at all. We're seeing net job losses. That's something that Federal Reserve Chair Jay Powell acknowledged at his last press conference. We're seeing disinflation actually catch momentum. So right now, it is only the AI trade. The AI trade 12 months ago, had we been having the same discussion, was based on cash flow and profits. Now it's based on leverage, debt being taken on to finance that trade. So I think that a lot depends. Actually, I think the entire world economy right now and all the world markets depend on this AI momentum trade staying intact. For now, that seems like it's happening. But if you look at something like Bitcoin and what's happening in the cryptocurrency space, there's clearly some risk off that's taking on right now.
Yeah, Daniel, absolutely. Markets always manage to get interconnected, don't they? We saw that in 2008. It was the U.S. housing market that brought the world down. We hopefully this is nothing similar. And hopefully, and that's what people who are believers say, that this is real demand. These chips are really needed. And there's an underlying business case. But yeah, that's a longer debate for another day. In terms of diversification, where else are you investing? Are you looking at global markets, emerging markets? Where would you be putting your money in 2026?
So I think whether you're looking at the United States or whether you're looking around the rest of the world, it's up in quality, it's dividend paying, it's cash flow. People are looking in a falling interest rate environment. I understand that other central banks around the world right now are looking to raise interest rates. I'll believe that when I see it. But in this particular backdrop, I think what people are looking for is cash flow. So it's solid dividend paying stocks, whether you're talking about the United States or whether you're talking about emerging markets. True companies that are going to survive whatever it is that's to come with global trade and whatever the outcome is, as you say, another discussion much longer for another day with the AI bubble.
All right. Hi, Danielle. Good morning. Good to see you, Ben. Nigel on this side. Quick word with regard to emerging markets. I recall in our past interactions, you liked a market like Mexico. And among emerging markets, I think you believed India was favorably placed. That was the view, I think, a year or so ago. This year, India has been a rank underperformer, actually. 2026, does India get back to its outperforming ways? And from the emerging markets, what do you like?
Well, so I think the situation with India is one simply not necessarily of fundamentals, but more of air coming out of the bubble, a little bit of rationalization, normalization in the metrics, and that the underlying story in India is going to remain intact. I would be very cautious about other emerging markets going into the new year because, again, the United States is clearly in recession. Again, that is something that Chair Jerome Powell acknowledged at his most recent press conference. And I think it's very naive and premature to say that if the United States is in recession, that there's not going to be a knock-on spillover effect into other markets.
What's your base case for the U.S. markets? Does the AI bubble prick? Does it slow down? In terms of the U.S. economy? Because as you were just highlighting, there are ramifications. And then come to the view on India.
Well, I think when it comes to the AI bubble being pricked, I think we've already seen that. We're seeing a massive rotation right now, and we're seeing high levels of resistance once you get into any given trading day. And as enthusiastic as the trading may be going into the day, we're seeing a pullback. But again, when it comes to India, I go back to the reason that the entire world has been so bullish on India for so long. And that's if you compare the demographics of the developed world to that of India, if you compare the educational attainment levels of the rest of the developed world to India, you're always going to come out ahead when you combine demographics with that dynamic. And I think that is why, for the long haul, India is going to be a solid investment. In the short term, maybe not, but I think over the long haul, that is going to be maintained as the case.
All right, Danielle, so do you think the FIs come back to India then? You know, things are shaping up for better times in terms of earnings, in terms of economic activity. Our central bank has been active here, and the central government as well has been trying to spur some kind of consumption. So do you think the FIs come back? They have been big sellers out here. I think last count, $17-18 billion is what they have sold. You put the primary and secondary market data together. FIs return back to India?
Again, if you combine the idea of the momentum and herd investing and the notion that there is going to be an exodus from the AI tech bubble in the United States, that money is going to be looking for a home. So I certainly think that is a prospect for the flows to come back into your market.
Okay. That is an optimistic note to leave this conversation on, Danielle. Thank you very much. And we really hope investors will show that faith and it'll translate into those flows in 2026. Thank you for joining in. Wish you a very, very happy holiday season and look forward to talking again. Thank you. Well, with that, let's move on to individual stocks as well. And once again, actually, let's check the gift nifty and what the implied open is suggesting, because markets across Asia, we've got mixed trends. It's all eyes on that Bank of Japan meeting and whether they indeed deliver this 25 basis points rate hike or not. And in anticipation, right now markets are doing okay. They've taken over that positive handover from Wall Street. All of Asia is up. Therefore, you saw that implied open also suggesting at least a 70 to 75 point upstart. Looking good. So that's the backdrop against which we start trade today. Now, what about individual names? Our team is standing by with the CNBC-TV18 list of top stocks to watch. Rima, let's kick it off with IT first. Accenture came out with numbers. What's the takeaway?
Well, Accenture's share price ended down 1.5%. So Q1 FY26 numbers were fine. But despite that, the company did not raise the full year guidance, and that perhaps disappointed the street. So FY26 revenue guidance remains unchanged at 2 to 5%. And this is despite Q1 actually being slightly at the upper end of the company's own expectation and analyst expectations. The company in the commentary says there is still no change in the discretionary demand. Overall spending remains consistent with the trends that we had last year. Generative AI continues to gain traction. Gen AI contributes about 10-11% to the total bookings, 6% to the overall revenues. But now Accenture is saying that we will discontinue giving these advanced AI metrics because AI is now embedded across almost all client engagements. So just at the time when TCS started giving you, disclosing these AI metrics, Accenture, which was early with respect to its disclosures, is now saying that we will not be delineating the two.
And that actually makes a lot of sense because we're seeing that, right? In almost all service offerings, AI is getting embedded. Whether you're booking flight tickets, whether you're doing, any kind of Google search, it's AI indeed, or even social media apps. AI is making its presence felt everywhere. But that's not the only news or the only reason why we're watching for IT stocks. HCL Tech has done a small acquisition.
It's a small acquisition. So they've signed a definitive agreement to acquire Hewlett-Packard's Telco Solutions business. It's an all-cash deal for $160 million. And this builds on a prior deal that the company had done with HP, HP. Now, basically, this acquisition, small one, $160 million. It's a tuck-in acquisition. It strengthens their position in the telecom sector. They bring on board some telco clients and about you get 1,500 engineers also.
Okay, that's HCL Tech. Got that. Let's move on then. There's Bharti Airtel. Guess what? It's an all-Rima day. What's the news on Bharti this morning?
Well, so Bharti Airtel in 2021 had done a very large rights issue of 21,000 crore rupees. Now, as a part of that, 25% was you had to collect upfront. Balance 75% was left from 2021. And the company had done this rights issue thinking that maybe the 5G related spends, in the auction, etc., they may need money anytime. But finally now, after 4 years, the company is calling for the balance 75%, which is about 15,740. So this is amazing for all those rights issues, the people who participated, because their payout is 400 rupees. And then you're going to get a share for 2,000 rupees, but this was way back. I mean, it was anyway a, rights issue in that sense, and promoters will be participating. Though Singtel hasn't disclosed very carefully, but they have said that they will be renouncing part of it. Now, what does it mean for Bharti Airtel? Two things. One, they get 15,700 crore rupees, which the company says will be used to repay their debt. And two, because the partly paid up shares get converted into fully paid up shares, there will be a dilution. Okay. The share base expands, so there will be a dilution of 5 to 6%. So this is the impact for Bharti Airtel. Money comes in, deleveraging, but there will be some dilution.
And there are those lucky people who get Bharti shares at 400 rupees a piece.
Yeah. I mean, and they had paid a little bit even in April of 2021. Yeah. But even then, if you account for that, it's still been, I'm sure, a good trade.
Absolutely, absolutely. So Bharti is something we'll watch for, one of the best performing stocks of 2025, actually. Moving on then, Ekta is joining in and she's watching out for a couple of pharma and healthcare stocks. Morning, Ekta.
Well, yes, morning. I'll start with Lupin, which is in focus because they've signed an exclusive licensing agreement with an Italian company, Neopharmed, and this is for marketing promotion of a gastro drug in Philippines and Brazil. Biocon is in focus because they've received an establishment inspection report with a VAI, which is a voluntary action indicated status, indicating a compliance is in line for their facility, and this is their facility in Cranberry, New Jersey. And lastly, Max Health will be in focus because they've announced the entry into the Pune market via acquisition of Veravada properties, and they will be setting up a 450-bed super speciality hospital with an investment of over 1,000 crores in the land that they've bought from this particular company, which will be commissioned over the next 3 odd years.
Thank you very much for that. Going across now to Vinny. Vinny, Voltas held an analyst meet yesterday. What were the key takeaways?
So in terms of key takeaways that we had that came in from Voltas, the weak demand that has still continued even in Q3. Obviously, November, December is a seasonally weak quarter anyways for room ACs, but elevated channel inventory days that came in at around 45 days versus last year was 20 to 25 days. So year on year basis, obviously we'll be seeing a decline, but sequentially there is an improvement. So some green shoots coming in sequentially. Q3 will be better than Q2, and that is a positive sign that comes in there. Management also reiterated that the market share in ACs is non-negotiable. They are working on recovering the lost market share, and which was previously in calendar year 2022, the market share that they saw, that is what they want to come back to. They've already gained 100 to 150 basis point in this calendar year itself, mainly supported by the strength in regional distribution. So market share gains is something that we'll keep an eye out on for Voltas going forward. Pricing strategy, the company highlighted that the pricing strategy remains under evaluation with multiple factors that are being considered to decide the percent of the hike that they should be taking or pass through for the end user. And that is the key update that we have from Voltas. We'll expect green here, given that at least they're starting to see some bit of a green shoot in terms of sequential improvement there.
Got that, Vinny. Thanks a lot for that. Well, Dalmia Bharat as well had an analyst meet, and CLSA, they continue to remain optimistic on the stock. They have a target price of around 2,650 rupees. A few takeaways that we've got from that note. The management highlighted that an expected high single-digit volume growth for Q3. That's supported by sequential improvement in November as well as in December following a prolonged monsoon. So in demand, they're saying things are actually picking up. However, on pricing, things remain weak, especially in eastern region, where there are prices that have declined by around 3 to around 4% on a blended basis, which will likely impact margins for the quarter. The company has reiterated their disciplined pricing approach. They're avoiding aggressive discounting and then chasing market share. So they're avoiding that sort of cuts in terms of pricing. On the organic growth, Jaisalmer greenfield expansion, that remains an optionality for them, because they have limestone reserves which were acquired at a 20% premium, and land acquisition and clearances are in advanced stage. So put everything together, the stock that's corrected a fair bit from the recent peak, well, going with a mild shade of green on this name. But time to get in Ria, Ola Electric doesn't get out of the news. I'll tell you what, the bulls will be hoping that finally the promoter is done with the selling, because it's gone on for 3 straight days. But you're tracking that one and BLS International.
Well, yes, Nigel, Ola Electric again expected to open in the red today because the promoter Bhavish Agarwal has sold another 2.83 crore shares of the company at a price of rupees 31.9. Now, as you said, this is the third consecutive day of selling, and up until now, the total amount sold comes out to be roughly 324 crore rupees. Now, in a statement, the company has said that this transaction was undertaken solely to repay a promoter-level loan of approximately 260 crores and also to release all 3.93% of shares that were previously pledged. Now, following the transaction, the company has said that the promoter group continues to hold roughly 34.6% stake in Ola Electric with no dilution. Now, as a result of this, the stock has been falling over the last 3 trading sessions. It is down roughly 15%. Yesterday, it also hit an all-time low of rupees 30.76, and even since its listing in August of 2024, the stock is down roughly 65%. Today, again, the stock is expected to open in the red. Moving on, though, to BLS International, positive news flow on this front. The Delhi High Court has set aside an order of the MEA barring the company from future tenders of the MEA and India missions abroad for a period of 2 years. Now, the MEA had issued this order on the 11th of October of this year, after which the stock fell roughly 17 to 18% over the next 3 trading sessions. Now, post this, the company had challenged the debarment order by filing a writ petition before the Delhi High Court. And now, as a result of the court's decision, the debarment imposed on BLS International now pursuant to the MEA order now stands set aside. So this stock expected to open in the green today.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are the IT names. HCL Tech on the back of the acquisition, Bharti Airtel, Lupin, Biocon, Max Healthcare, Voltas, Dalmia Bharat, and BLS International. Stocks with negative news flow are generally because Accenture declined yesterday post the numbers and the no revision in the guidance. Maybe IT stocks see some profit booking after yesterday's resilience, and Ola Electric. All right, moving on now from equities, let's get a handle of all the action from the world of commodities overnight. Manisha is now joining in. Manisha.
Well, thank you for that. I'll start with the crude oil prices, where we are headed for a second weekly decline. Prices are trading near 5-year lows, and we've seen more than 20% of a decline come in for both the crude major varieties there. And with this, we are headed for a worse performance really in the last 5 years that you have seen in case of crude prices. There's a bit of a profit taking that also seems to be coming in for copper, while it is holding near multi-month highs. The major gains clearly are seen in case of aluminum, where a latest report suggests that Mozal aluminum smelter in Mozambique will be placed under care and maintenance by the month of March. This also has led to a chain reaction where you have the global producers now seeking premiums of $200 a ton to Japan. We've seen on-warrant LME inventories decline. The Shanghai inventories have been on a declining spree anyways, and aluminum clearly in the last 24 hours has seen a lot of support come back.
Okay, all right. Thanks a lot for that, Manisha. Well, time to slip into a short break. On the other side, Sid Khemka of Motilal Oswal Financial Services is waiting for us with some fundamental stock talk. Welcome back here, tuned into Bazaar Morning Call, and hope you're having a good Friday morning. Well, let's get straight and exclusive now. As the Adani Group is all set to launch the Navi Mumbai Airport on December 25th, CNBC-TV18 Shireen Barnes spoke to Jeet Adani, Director of Adani Airport Holdings, on their debt reduction plans, the impact of the currency depreciation on the business, and also on the IPO and the demerger plans. Let's listen in to what he had to say.
Speaking of investment, let's also talk about debt. Debt of a little over 27,000 crores at this point in time. What's the debt reduction plan?
I don't think there will be a debt reduction immediately. I think it's more changing the structure. So if you see Navi Mumbai today, it's been financed using classical project debt from Indian banks. At some point, we want to, once it's operational and stabilized, and before we begin the next phase of Navi Mumbai, we would want to refinance and take the Indian banks out because we would want to tap them again for project financing.
Okay.
And that's been our model if you look at any of the businesses. So we use Indian banks during the project life because that's the sort of appetite that they have. And then for long tenure, 10-year, 15-year, 20-year, 30-year debt, we tap the capital markets, either global, domestic, either one.
Well, you spoke about refinancing, and you just did a refinancing of about, 750 million, I think, in June this year. What about the currency risk at this point in time? We've seen the rupee depreciate now to 91. Does that worry you?
So structurally, it doesn't affect us because we keep hedging and we don't keep any exposure to currency. So our policy has always been that no exposure to currency, no exposure to interest rates. So whatever we refinance at, we lock that interest rate for 20 years. Whatever we refinance at in terms of currency, we lock that also for 20 years.
So the Adani Enterprises rights issue, there was buzz that perhaps you could use some of those proceeds to cut debt for the airports. Is that likely?
No, so there's some debt that Adani Enterprises has.
8,000 crores.
No. So
the loan that they've given.
That AEL has given to Adani Airports, that is the part of it which will get cleaned up. No.
Okay, so you will use the rights issue to clear that, the 8,000 crore rupee.
Yeah, but that's not an eventual end use. The eventual end use is going to be the expansion.
Okay. You talked about capital markets. So an IPO for the airport infrastructure story from India for you, when is that likely? Are you working towards it?
So absolutely. I think right now it's fluid in terms of which option to go for. There's always an option of a demerger from Adani Enterprises, which is what we had done in the past. There's also an option of IPOing. I wouldn't say we're leaning one way or the other. Also whether to get in an anchor at the right time to establish a value benchmark.
A strategic or?
Strategic anchor, someone who can, has a name in the market and is able to...
In the airport business?
At the airport business. So giving the airport business itself the right value benchmark before we demerge or IPO. That's also something we're considering. But right now I wouldn't be able to give you a firm date, but definitely over the next 2-3 years, you would see something coming up.
What would you said that there's no decision yet or no preference yet on which route you decide to take. But as you evaluate both these options, what are some of the pros and cons of both, either the demerger or the IPO?
Look, demergers are something that we are used to. We've done IPOs before in the past, but what demerger allows us to do is unlock value to enterprise shareholders directly. And that's something that they also do expect. And an IPO really doesn't allow us to do that. And but it does create a lot of buzz. So I think it's evaluating between those two, that whether we are able to push the value of the business as much as we can on day one, or we give the right return to shareholders on day one and then push the value sustainably. So I think we're leaning more towards demerger, but I would say the decision hasn't been made today.
Okay, the decision hasn't been made today, but you anticipate that call in the next...
Sometime soon.
Both in terms of the aeronautic revenue as well as the non-aero fee, how do you see that mix changing over the few years,
Right now, at a platform, we are 50-50. Mumbai is slightly higher. It's about 60% non-aero, 40% aero. We see that over the next 10 years, aero will be 10% of the overall revenue.
Really?
Yeah. 40% to 50% will be non-aero, and another 40-odd% would come from city development. Yeah.
Okay, from city development.
City side development. Yeah.
So you're saying that the actual aero operations are going to be down to just about 10% of revenue.
It's the most critical part, but it's not going to be the most
revenue generating
part. I mean, it still will be, but in the larger scheme of things, the weightage will be less.
And when you talk about city development, lay out the roadmap for us, what we're talking about.
Oh, absolutely. So across our existing portfolio, we have a pipeline of 400 to 500 million square feet of development. I wouldn't say over a certain period of years because we time it as per market. In the first phase, we are doing about 22 million construction, 14.5 million leasable area. Across Mumbai, Navi Mumbai, Ahmedabad, Lucknow, and Jaipur. And in terms of product, we are focusing on hospitality-led retail, hospitality-led, commercial and office, and hospitality-led entertainment. So in Navi Mumbai, we are doing about ultimately 15 hotels across 5-star, 4-star, 3-star, and sort of transit hotels. We're doing actually more than 15. We're doing an arena that can house 25,000 people coming in. Because again, because of the connectivity of this place, it's super easy for people to come in and out, and it's just a perfect place. We're doing upwards of 7-8 million square feet of office space over here. A massive retail mall, which will start off as one of India's first outlet malls, which is a concept that doesn't exist here.
Yes.
And then eventually transition as the area picks up into a high street mall.
And by when do you expect all of this to happen?
That's what I was talking about. The first phase of 14 million is coming online in 29-30.
Well, that's the big news for all Mumbaikars. The Navi Mumbai International Airport is all set to begin operations on the 25th of December. It starts with one runway, one terminal. But this will mark the start of a major new aviation hub for the MMR region, which will help reduce the congestion that we have at the existing airport and also help handle increasing passenger traffic. But moving on now, Siddharth Khemka, Head of Research, Wealth Management and Motilal Oswal Financial Services is now joining in. Siddharth, thanks so much for joining in. Voltas and Dalmia Bharat, these two had analyst meets yesterday. And Motilal Oswal, did you all attend it? What were the key takeaways? And is there an investment recommendation?
Definitely. Good morning and good to be on the show Friday morning. I think Voltas, what we are witnessing is that we met the management to understand the current demand trend, especially if you look at the consumer durable segment has been reeling under the inventory working capital cycle. And also we try to understand the impact of upcoming energy label changes within the home appliance segment. So overall, what we believe is that Q3, there could be still volumes could be under pressure due to high.
Oopsie daisy. We'll get Sid back. He's giving us his view on Voltas, so we'll have to keep an eye out on that particular one. I don't know whether we have him back or not, but a lot of stocks to discuss actually today because Voltas, Dalmia Bharat, post those analyst calls that they had. I'd also want to know what's going to happen to Ola.
So much selling.
All 3 days, back to back, there has been selling. And what's the future of the company from here on? I was looking at it in terms of market cap to sales. It's down to around 3 times market cap to sales. More prudent way would be to get the EV. Then I'll have to wait for the debt out there. But just take a look at the stock. Just pull up a wider timeline of the stock. It listed, went to around 140 rupees, then came down to 35 rupees, went back to 75 rupees, and boy oh boy, making fresh lows right now. I think Sid is back with us. Sid, okay. All right, I'll tell you what, I think we'll take a short break, come back, and then we'll continue our focus on markets. We'll also get Siddharth back and our technical experts as well on the other side. Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. We were getting a call on Voltas from Sid. So Sid, why don't you go ahead and complete that? What should you do? Should you, buy the stock, stay away, and then we'll discuss a lot of other stocks.
Sure. Good morning, Nigel. So if you look at the key takeaways were that Q3 continues to remain weak for room AC's segment. We interacted with the Blue Star management also sometime back. Due to the extended winter and elevated channel inventory, about 45 days. The pricing and inventory normalization, that has been the focus with the GST cut, which has been fully passed on with the upcoming energy label changes that can further trigger the channel restocking, and that could lead up to pricing, to sales improving. So what we are saying is that in the current financial year FY26, it could remain weak, but the management is very confident about the long-term growth prospects, and we also believe with the structural changes now in place, there is definitely scope for growth. And what we are also seeing is that the downtrend is bottoming out. So clearly there needs to be patience if someone is holding on to Voltas. So we recommend hold. We don't recommended fresh buying or entry into Voltas as of now.
All right, Sid, what about Ola? What's going on there? What would, a lot of investors are wondering what to do with the stock now. On one side, you have the promoter that's selling and saying he's done. Now, finally, it appears he's done, as per what yesterday's release is. Hopefully, there is no shocker coming post-market hours today. Your view on the stock, another way of looking at it is will this promoter continue to run the business? It's come down drastically. The stock is making fresh lows. What do you think about the future of Ola? Do you think Bhavish Agarwal and team will run it? Do you think someone could come in there and look at it as an acquisition target? Just throwing out various opinions that you're getting on the street. Your view?
So yeah, Nigel, I think you put on a lot of strategic questions to me, which you should have put to Bhavish Agarwal.
No, I'm going to put that to him. Trust me, I'm going to put that to him. And when we get a competitor, we'll ask them as well, what do you think of the company? Is there value added on this 13,000 crore market capitalization? But you tell us, what's going to happen added on this 31 rupees? Would you suggest people to dip in, stay away? It's too, unclear what the promoter wants to do next.
So yeah, I think unfortunately we don't have an active coverage, but I do have certain views which I can share with you. I think we are positive on the two-wheeler EV side of the business. We believe that's the growth story there. We have seen how some of the legacy businesses like TVS Motors, Bajaj Auto have gained market share in the EV two-wheeler space. So they have a good brand, they have a good model. I think the business needs to scale up to the potential. So as of now, because of a lot of not because of lack of clarity in the future growth ahead, I think one should stay away. There are better opportunities. As we said, we like TVS Motors, which is a preferred pick in the two-wheeler space, especially given the market leadership that they have been having in the EV two-wheeler space. I think that's something which is doing much better. So clearly, I would say that one needs to get more clarity in terms of the future roadmap for Ola to get a clearer view.
Okay. Sid, Shriram Finance, everyone's sitting at the edge of the seats waiting for that announcement. Maybe it comes out around noon today. And indeed, if it plays out as what the reports have said, that, MUFJ, Mitsubishi UFJ walks in, buying 20% of the company, that's big, right? That'll be serious money, over $4 billion that will come in. Where I don't want to speculate, but the sense is the stock has already done so well. Let's pull up Shriram Finance 1 year. One of the best performing stocks on the Nifty. Last 1 year, it is up 48%. Let's get the stock up. Can we get Shriram Finance on the screen? Okay, we'll just get it up. So Sid, the question is, can you still buy, if you've already, you have diverse financials in your portfolio, you've got the company, you've got the stock, then no problem, I guess. Then the answer is just keep riding it. Point is, can you buy now?
Yeah, I think that's a tough question to answer. This development is definitely a big positive. We have written in our past reports also that a strategic investor would bring in a lot of value and scope for growth because if you look at the management focus going forward is to expand the new vehicles, the new CV market where they have been gaining a lot of strength. They are now setting up focus on the gold financing business. So from a pure play auto financing business, they are becoming a much more diversified financing player. So a lot of growth ahead. At current valuations, I feel even at a 2.2 times on a FY27 price to book with the ROAs in excess of 3% and the future growth potential with the strategic partner coming in, I think there is a scope for a credit rating upgrade, cost of funds further coming down. So we still feel that there could be a 15-20% upside. Yes, the stock has seen a strong run up, so any dip could be utilized as an entry opportunity for the way ahead.
Okay, all right. Sid, stay on. We'll come back with more questions in just a bit. By the way, that's news coming in on the very, very expected BOJ rate hike. It's been so well telecast that I don't see any immediate reaction in the market. The Nikkei was always up about 1.5%, and it still is. Let's check the currency markets if there's any movement over there. The yen, 155.77. In fact, it's dipped a little bit as soon as that announcement came in because everyone's going to be focusing on the commentary. The fact that they're doing 25 basis points was known because inflation has been running at close to 3% in Japan, which is historic. So finally, the BOJ has walked the talk, despite, by the way, the change in leadership in Japan, the new prime minister. has been pushing for lower rates, easier monetary policy, but the BOJ has held its own, and it's followed that path. It's all about the commentary, and we'll have more, I think, cues from the commentary coming in. The dollar yen right now at 155.72. Anyway, the dollar yen has appreciated depreciated in a big way. The yen has fallen significantly versus the dollar, despite the expectation that BOJ will be hiking rates this year because of uncertainty around the economy and so on and so forth. But and the chatter is that at some point in time there could be intervention in the market as well if the yen depreciates substantially from these levels as well. But for the time being, it seems to be on expected lines. Let's see what the commentary finally has in store. More on the BOJ in just a bit, but let's get back to our markets. We have Hormaz joining in, and as always, with some interesting movers and shakers, the delivery stats from yesterday. Hormaz, this morning, what's on your radar today?
Good morning, Surabhi. And asset managers are on the radar as they were in yesterday's session as well. The big talking point, all of them, HDFC, AMC, and Nippon Life, AMC, and UTI AMC seeing healthy gains and healthy trading volumes as well. All of them significantly higher compared to their 20-day average. But I'm singling out Nippon AMC in comparison to the delivery volumes, because while for HDFC, AMC, and UTI AMC, the trading volumes are higher, but the delivery volumes are slightly disappointing. For Nippon Life AMC, there were 85 lakh shares that were traded, and 50% of those, or close to 43 lakh shares, were marked for delivery. And that is the only standout for Nippon Life among the other two asset managers in yesterday's session. Anthony Waste Handling was the other one, a news flow driven move. The stock was up almost 20% yesterday, the biggest single day gain since May of 22, volumes the highest since September of 21. Yesterday's volumes, the sum total of the last 160 sessions put together, and almost 1.5 crore shares that were traded on Anthony Waste yesterday. The 20-day average is under 60,000 shares, and out of those 1.5 crore shares, only 7 lakh shares were marked for delivery. The 20-day average is only 31,000 shares, and Thursday's turnover, which was close to 700 crore rupees, is almost at par with the free float market cap of the company. And bringing up Shriram Finance, of course, the big one in the news today. A deal announcement anytime from now. The stock has seen an activity before this, gained in 5 out of the last 6 sessions. There has been an increase in trading and delivery volumes over the last 2 days. 1 crore plus shares traded now for 2 consecutive sessions. Even yesterday we had 1.25 crore shares traded, 20-day average of close to 70 lakh, and the percentage of shares marked for delivery was high, was the second highest in the month of December in yesterday's trading session. Almost 70% of yesterday's trading volumes was marked for delivery of almost 86 lakh shares, and the stock is up almost 50% this year, turning out to be the best calendar year that it has had since 2017.
Okay, Hormaz, thanks so much for that. By the way, now the yen is moving, and it has weakened even more. Imagine this, in that commentary is really hawkish, the BOJ commentary. They're saying that they'll keep raising rates. They're expecting prices to keep rising in the Japanese economy, and therefore the rate increases will continue. And astounding it is that when rates are rising, you'd expect the currency also rises, but the exact reverse has happened in Japan. The yen on my screen actually fell to as low as 156.10, a little lower than that also. Then it's snapping back. But look at that. I mean, the yen is now down 0.3. It was down 0.4% versus the dollar. But yeah, it seems the BOJ is indeed saying the rest of the world can do what it wants. Governments can say what they want. But if we see inflation rising and prices rising, we're going to increase interest rates.
Well, that's right. We'll have to wait for further clarity on that front. But for the time being, that rate hike on expected lines, and the commentary as well, a little bit, maybe a little harsher than what you expected actually in terms of hawkish commentary. So let's wait.
We're so used to Fed saying, no, we'll be data dependent. They never say it one way or the other. They always say it's data dependent. We'll see how the data plays out. But for Japan in particular, the inflation has been above their target for 44 straight months now. That's 3.5 years. So I guess that explains why they're saying that deflation seems to be now firmly out. The country is now in the inflationary environment, and if it continues, rates will keep rising.
Yeah, I think that if is important out there, right? To keep raising rates if. So that's important. So for the time being, I'll say that the event is out of the way. The hike has come through. The commentary is still a little bit skittish out there, but further clarity is data dependent. So we'll have to wait for that. But at least for now, that the event risk is out of the way actually as of now.
That's how it seems like. And, remember, for the world, this would be a huge moment otherwise. Japan at 3% interest rates. I mean, pretty much for the better part of the last 2-3 decades, it is Japan that has been funding the world's carry, the famous yen carry trade. But earlier in the year, and we've seen that over last year as well, a lot of the yen carry anyway has been unwinding. So, global markets, perhaps the dependence is not as high as what it used to be, say, 5 years, 10 years back pre-COVID, when, Japan was pretty much funding everything, investments going in a lot of markets. But a lot of that has been
Slowly
undone.
Unwinding and reversing.
Yeah, so let's see. I mean, the hope is going to be that it's not going to be very destabilizing for global fund flows, but we'll have to wait and keep a close watch on this, because that fall in the yen is absolutely astounding. And also, the fall in the yen will also be linked with the fact that as interest rates are going up and that yen carry unwinds, you will be selling the yen. It will go back to your home currency or to, change over to some other currency. And that could lead to the fact that the yen has been so weak against the dollar for the better part of this year. Anyway, more on the global picture in just a bit. We are almost at 9 a.m. We'll take a quick break, come back with our technical experts and get you the trading calls of the day. And also Sandeep Tandon of Quant Mutual Fund is our market master. We'll get our conversation started with him shortly. Welcome back. Pre-open rates will start coming in the next couple of seconds. So let's do one thing. Go back to Hormuz. He's been going through a lot of the brokerage notes. Hormuz picked up anything interesting today?
Lots of them, actually. Before all of them go out for their holiday, they seem to be in overdrive in initiating coverages. Where Jefferies has initiated on Grow a buy recommendation, a 180 rupee price target as an implied potential upside of 26%. And they're saying that they have several levers to grow their EPS by a 35% CAGR over the next 3 years. And that includes a 19% growth in broking businesses, a 5x growth in new initiatives that they have launched, such as the MTF business and the wealth management book. And of course, a margin expansion of 700 basis points after the trough that it hits in FY26. Now, Macquarie has also initiated on another new listing, and that is Lenskart. It's an outperform recommendation, a 530 rupee price target. They're saying that it enjoys a competitive edge in the cost design and efficiency in comparison to peers, and improved supply chain utilization should drive more EBITDA margins towards the 33% level and triple its return on invested capital to 20% plus over FY26 to 28. An initiation on Aditya Birla Real Estate has come from Motilal Oswal with a buy recommendation, a target of 22.75, and they are expecting that it will post a 20% year-on-year growth in FY26, and EBITDA and PAT could see a multifold growth in FY28 to well over 1,000 crores and close to 980 crore rupees respectively. And lastly, the IIFL Finance has initiated coverage on First Source as a buy recommendation, a 420 rupee price target, and they are seeing that the turnaround by the new CEO over the last 2 years has been a credible one, and that has resulted in a marked pickup in large deal wins, a new strategic logo wins, increasing clients across revenue buckets, and a strong annual contract value and large deal sizes as well. Now, they're expecting a 12 to 22% constant currency organic revenue and EPS CAGR over FY26 to 28. And lots of initiations, all of these stocks likely to react.
Thank you very much for that. And the rupee has opened stronger against the dollar for the third day in a row. Tuesday was the day when the rupee had hit the record low of 91.08. On Wednesday, we closed stronger at 90.38. On Thursday, at 90.24 was the closing rate. And this morning, Friday, we've again opened up about 10 paise stronger at 90.14. Matt Orton is now joining in to comment on the Bank of Japan's decision to hike interest rates and the commentary. Matt, 25 basis points done and dusted on expected lines, but how would you classify the commentary? And what does it signal to you about future hikes from the BOJ?
So I think we're going to have to wait until the afternoon to get some clarity from Ueda with respect to when the next hike is going to be. The statement didn't really give or offer any pertinent information regarding where that is. I think, it says accommodative conditions are likely to keep supporting the economy. So I think the rate cut was largely expected by the market. Obviously, the market is still continuing to move higher, which is encouraging. But I think the main message is that, I don't think we can expect a constant hiking cycle. It's going to be similar to the U.S., where it's really going to depend on where the data continues to go. So I do think they managed to kind of thread a needle so far. But again, I think the market really, once we hear Ueda speak in the afternoon.
So as of now, it's hard for you to say whether the commentary that we've heard, it's dovish or hawkish. Is that correct? You'll still wait?
I would still wait because, again, the increase, the hike was largely priced in after this month. Ueda really gave hints that they were going to hike rates. It's still significant. I mean, it's the first rate hike since January. The rate is now at the highest in 3 decades. But I think it's just a reflection of the bank's confidence that it can achieve its inflation target and confidence in the overall economy. So I think that message is certainly resonating with the equity market right now.
Matt, just one question, because the fear is this unwinding of the yen carry trade. What are the monies involved now? Do we have a size of the yen carry trade? And what does this 25 basis points rate hike mean for an unwind?
So I don't think that's very likely, given that at least so far there haven't been any surprises to the market. If there had been a surprise 50 basis point cut or language was incredibly hawkish, I think that could have been a challenge overall. But I don't think it's likely you're going to see significant enough imbalances where you get an unwind in the yen carry trade. If anything, given the overall resilience in the economy, given where interest rates are in Japan, I would probably be biased to think that we're going to see some yen strengthening in 2026 once we get past all of this news.
So, Matt, this, precipitous fall in the yen doesn't seem to worry you. Basically, from a global equity standpoint and fund flow standpoint, where does this leave us? This 30-year high interest rates in Japan and the yen weakening to 156 this morning.
Yeah, well, I think it's certainly supportive of Japanese financials, and I think, again, the signal that the economic outlook in Japan is positive. I think that's a message that's good for equity investors. Obviously, you have very strong earnings revisions in Japan as well, which is a positive for equity investors. The flip side, like you brought up, Surabhi, is the currency moves, right? This is the same story of India, where you've seen foreign investors selling because of persistent weakness in the overall currency. I think in the case of the yen, just given how significant the moves are, I think a lot of investors are biased to say, we can hold out here just given the weight of Japan across global indices as well. You can't afford to be significantly underweight. The largest, country weight within the developed country indices with strong equity gains. So I think that provides a little bit of a ballast to see significant foreign investor selling. And there's also the ability to hedge the yen because it is a very liquid instrument. So there are ways that investors can protect the gains that they get in the overall equity market.
Okay. All right, Matt. Thank you so much for joining us at short notice. This was really helpful, the context on this 25 basis points increase in interest rates that the BOJ has delivered. All right, let's quickly get to our technical guests to figure out what kind of trades we can work with today. The pre-open session is telling us the Nifty is starting almost 80 points higher, according to the pre-open. Sudeep Shah of SBI Securities and Siddharth Rai Mangla of Stockbox with us. Sudeep, let me come to you. Trades, Nifty or Bank Nifty, anything on the indices today?
Good morning. Yes, I feel that with this Bank of Japan policy now going out of the way, and some kind of uncertainty was there in the last few days, what kind of statements would be coming from the governor. That is yet to come in the afternoon. But I guess the initial signs show that some kind of nervousness is now getting settled. And I feel now 25,750, 25,780 zone on the Nifty would be a good support, because right now, even though we are opening gap up, in the last 1 month, we've seen several times that the gap ups or sometimes a lot of times are nullified, and we once again go back to yesterday's close. So overall, from that perspective, 25,750, 25,780 zone becomes an important support. On the upside, we expect levels of 26,050, 26,100 to be achieved, purely because if you see the long short ratio right now, the derivative positioning, that is at 8%. So from here on, we expect a gradual easing of that number, and with that itself, we could see the large caps outperforming and some quality mid caps also moving on from here.
Got that. Okay. All right. Let's get Sid as well. His view on the index. Sid?
Hi, Nigel. Good morning, and thanks for having me on the show. See, Nigel, if we talk about Nifty, yesterday's move in the index, I think it was convincing enough to bring back some confidence in the, in the structure of index, especially because Nifty finally did take support in the 25,850, 25,750 wala, 25,800 and 25,750 wala zone. So now I do think if somebody has an existing long position in the index, they can definitely keep on holding on to them with stop losses around, just like Sudeep said, in the 25,750, around that level. But if somebody has to take a long position from here, Nigel, see, we have to wait for a while after the opening to see that if Nifty can manage to sustain above 25,900, then only we have to take fresh long positions on the index, because then the momentum in the index will be on our side. So for now, the structure looks good, but for fresh long positions, we have to wait for the index to sustain about 25,900.
Got it. Okay. All right. But you all got some stocks for us. Sudeep, you go first. What's on your radar?
Couple of them, Nigel. First of all, good morning. Nigel, I feel the two stocks which look good and where the breakouts have come. One is from the F&O market and one is from the cash segment. The F&O one is APL Apollo Tubes. Here we have seen a breakout on the weekly charts. Downward sloping trendline breakout has come. And here we feel that with the kind of momentum that has come in the last 2 days, the stock is well poised to go up to 1860, 1880 on the upside in the coming few sessions, and on the downside could be bought with a stop loss at 1760. The second one is from the cash segment, an auto ancillary name, which is FEM Industries. FEM Industries yesterday has closed at the highest level of its consolidation. The stock is in a long-term uptrend. Long-term, medium-term charts both indicate a strong structure, and in the short term, post this consolidation, we feel that a fresh move is in the offing. And this can be bought with a stop loss at 2280 and a targets of 2500 on the upside.
Siddharth, what would your stock calls be?
Yeah, sure. Two stocks, both of these we have to buy. The first one is ICICI Prudential Life. See, there was a breakout attempt in this counter just a couple of days ago, but it could not sustain that. Yes, finally, yesterday there was another attempt of that breakout, but now I do think this time the stock is going to sustain, and we will be seeing a very good momentum from here on. So we can buy ICICI Prudential Life. Right now, this stock is opening around 650 levels. It can be bought here. So stop loss will be at 639. And our targets being the first target 670, second target 685. The other one is from the IT pack. I do think that one of the other IT stocks must be in our trading portfolio at this time, and the stock I've picked is Tech Mahindra. See, there was a very good breakout in yesterday's session. The move has been very convincing. It can be bought right now. The spot will be around 1610, 1611. We can buy it here. The stop loss will be at 1595, and the targets being the first target 1640, 1640, and the second target 1655.
Got it. Okay. All right. Got that, gentlemen. Thanks a lot for joining in and giving us those views. We'll keep coming back to you all and get a fresh update as well. But let's focus on a couple of news flow that came overnight. Well, the DGTR has imposed anti-dumping duty on import of cold-rolled, non-oriented electric sheet from China. Now, this is good news, because this imposition has come about, but you need to keep in mind that the DGTR had already recommended the imposition of anti-dumping duty in September 2025. So what's the impact? It's a very small part of the Indian steel market. I think it's sub 1 million tons odd, and majority of this particular product is actually made domestically. The development so has very, very limited financial benefit, but sentimentally it's positive. The key trigger, remember, for the steel industry is implementation of the safeguard duty. That's been delayed for a while. So that's something that the street is waiting by from. It expired on November 6th. The steel secretary told us expect something soon. It's not yet come about. So directionally positive for the steel stocks, but the big trigger is going to be implementation of safeguard duty. But Rima, you're tracking Bharti Airtel. Tell us more.
That's because the company has made the final and the first call for the rights issue. Now, just to go back in time, in 2021, the company had done a 21,000 crore rights issue. As a part of that, 25% of it was collected upfront. That's 133 rupees. And after that, for a period of 4 years, shareholders were waiting, but the company didn't make that call because the free cash flow situation improved. And even the amount that they had to pay for AGR spectrum was under control. No company was overbidding. So therefore, they didn't make that final call for the rights issue, but that has happened yesterday. So now shareholders, the rights shareholders, have to pay an additional 401 rupees, as a part of the rights issue. So basically, for those who participated in the rights issue by paying 535 rupees, 133 earlier and now 401, for 535, you will get shares of Bharti Airtel, which are at 2,100 rupees. What it means for Bharti Airtel, they get 5,700 crores, which the company is saying will be used to repay debt. There will be a dilution involved to the tune of 6.5%. And thirdly, also separately, as a part of the planned succession, the current CEO gets elevated. That's Gopal Vittal. And Shashwat, who has been the interim CEO of the company for over 1 year, he's been tailing Gopal Vittal. He has officially taken on charge the official announcement has come. He comes on board on 1st of January. He takes charge. So it's just a planned succession. But I think the street likes the way it was conducted and handled.
Okay, all right. So that's Bharti Airtel also in the spotlight today, 9:14. So we've just got about a minute to go before the action starts off. 96 higher. That's where the pre-open has finally settled. Let's see how it goes. I'm just checking where Shriram Finance is, because that's the one stock that's going to be in the center of news flow today. There is a press conference at around noon. That's when the board meeting concludes, and we will know who the new investor is, if it indeed is MUFJ. So watch out for this one. Other than that, in terms of the stocks that have been in news, not too much of an action really. There's BLS, which is up 3.5%. Ola Electric, hopefully that overhang is out of the way. At least that's what the market's hoping for. 2% up on Ola. Okay, the bell has gone. Let's see how we're starting out. Almost 88, 90 points up on the Nifty to begin with. Mid-cap index is up about 0.25%. The Bank Nifty is a little quiet. Let's see where the gains are. Max Healthcare up about 2%. There's Infosys, Wipro, HCL Tech, TCS itself after that small acquisition. HCL Tech after the small acquisition. All of IT actually is up and about, looking very, very smart. Tata Steel is up about 0.5%. Reliance is supporting the Bulls case quite nicely this morning, 0.5% up. On the financial side, I can see Axis Bank, Jio Finance, Bajaj Finance. These are some of the early movers on the way up. On the way down, caution around Shriram Finance. It has been, remember, one of the best performing stocks in the Nifty this year with a gain of almost 50%. Right now, shares are down about 1% this morning as things open up. M&M is a little quiet and flat. But actually, there's nothing else on the Nifty that's declining. I mean, nothing at all apart from Shriram Finance. It's a nice shade of green, bright shade of green. And now we have a full century. Look at that board. It's just up and away. And looking very, very solid for the Nifty this morning. 25,900. Bang in the middle of that 400-point trading range, where we have spent the better part of the last fortnight.
Well, that's right, Surbi. And in fact, the Nifty IT index actually is doing very, very well. That's the leader today. It seems to be looking through those Accenture's numbers that the spends haven't really picked up. It's more or less flattish year on year. That index has been leading the way. I think a few sessions ago I mentioned that if this index really has to come to the party, then it will outperform by a great deal, because still year to date it's down close to around 10%. So tech, that's the way to go. The other stocks that are on focus today, ITI, I don't know why that stock is flying away. It's up 10%. Big up move is what we're seeing out there. Walchandnagar as well, another top volume mover, up 5.5%. Ola Electric, for the time being, the scooter is going the right direction. That's upward. It's up close to around 4.5%. Remember, periodically we have seen, in the past, in the last two trading sessions, starts off in the green, but then there is selling that comes in. So we keep an eye on that. Bellrise, one of the best performing IPOs of this year, continues to do well. The stock is up close to around 3% and the volume is quite large. Anthony Waste, post the big move that we've seen this week, it continues to build onto this gain. So that is well up close to around 3%. So it's a good start to trade. Misho, well, it's down close to around 4%. Stock that's up 35% in this week itself. So that's coming for some profit taking. And I think Hindustan Zinc as well, some kind of profit taking. Just looking at the headline index, it appears the street says that this event risk with regard to Bank of Japan, for the time being, it appears to have passed, and they're willing to look ahead. So the Nifty lifting its bat 100 points higher.
Well, Vari Energies, Premier Energies, which get added to the F&O from the 31st of December, are also seeing some buying. Max Healthcare has been a mover, up 1.5%. The company has planned its entry into Pune with a 1,000 crore capex, and they will be, entering Pune with a 450-bed hospital in the next 3 years. Planned investment is 1,000 crore rupees. Aditya Birla Real Estate, where Motilal Oswal has initiated coverage, the street is a bit excited. BLS International, Surbhi had highlighted it earlier. But the news is that the Delhi High Court has set aside a Ministry of External Affairs order which barred the company from participating in Tenders of India mission for a period of 2 years. So that was negative news, but that negative news has been lifted by the Delhi High Court, and you can see the relief in the share price today. Biocon has opened up in the green, so has Lupin. In terms of the mid-cap IT names, you've got some strength coming through in LTTS, Tata Elxsi, India Mart. These are stocks which have opened up with gains of 1.5%. Anthony Waste Handling saw very large volumes yesterday. That continues with its up move. So that's looking up and away. Lenskart, where I think Macquarie or Morgan Stanley, one of them, Macquarie, initiated coverage with an outperform. Target price 530. So Lenskart at 420 now with a gain of 2.5%.
Okay, so plenty of movers and shakers and a very green-looking screen this Friday morning. So far, so good. Then let's introduce our market master of the day. Sandeep Tandon, founder and CIO at Quant Mutual Fund, is joining in. Sandeep, great to have you with us. And a really good time to be having the conversation, right? We're just winding down the year. And what a year it has been. A lot of learnings, lots to unlearn as well. So let's start right there. Not an easy year to make money. The usual momentum trade wasn't there. People couldn't simply latch onto it. How do you feel as we are winding up this year, how things are poised? Now, as we talk about next year, right now, again, there is optimism and hope. As human beings, we have to be optimistic. A lot of people feel that 26 is going to be a better year. Do you agree?
Partly, yes. See, let's understand few things very clearly. We are in a difficult phase of market, not on India. I think the way trend is building up is globally, okay? And it's not for 1 or 2 quarters, it's for a longer term perspective, okay? And second important thing you have to understand, we are living in an environment where interest rate globally will going to rise, and we are in structured bull run of interest rates, okay? Now, we are not talking about immediate spike, like let's talk about today Bank of Japan hike, okay? Too much hype was getting built around that. Some people were talking about 50 bips or 75 bips, but ultimately 25 bips what the general consensus got built. But what is very important, how you look at next year, okay? We expect maybe there could be another 50 bips hike even in Bank of Japan next year. So what we have to understand that interest rates are gradually inching up, which means the P contraction in the equity market will happen with a very different pace, which we are not able to anticipate, and some sort of AI related hype, which is now settling down. I'm not saying it is busted, but the hype, extraordinary hype, which was getting built globally on new age company, I think that will get adjusted, and some of these hype stock where massive re-rating happened without earnings, I think that is the area where we have concern. And with that background, obviously, we live in a relative world also. If these sort of stocks will correct and consolidate, then I think some of the beaten down, neglected territory stock, old economy, or old age stocks, that's the way defined it, will come back. And that's the way I look at it. So there will be opportunity, but their opportunity will not be there across the board.
Sandeep, just to complete the point on the Bank of Japan, I mean, from what we can understand right now till this plays out, you're saying that maybe there are more hikes that will happen.
Yeah.
But is that really going to be so destabilizing? Because the BOJ is the only major central bank that's raising interest rates. The world still is feeling very comfortable and happy, thinking the Fed will cut, and anyway, the Bank of England cut yesterday. So who else is going to start hiking rates? And then, therefore, is there any reason to worry from a global equity, cheap money standpoint?
Yeah. So first of all, let's understand even from a liquidity perspective. Let's say last 4 years or 5 years, we have seen extraordinary liquidity. Global liquidity was extraordinary. I think that cycle has either peaked out in 2025 or we are in the final stages of that, which means easy liquidity phase is getting over. That's the first point. Second most important thing is that we are living in a world where QE and QT type structure both will coexist. This we have been highlighting for a while. Both will exist. We have seen QT for a while now, and now we have US market has already, or US Fed has already started indirectly QE sort of thing. So we are in QE phase. Depending on the market environment, how participant will take, the central bank will keep on making these changes. And if I have to really conclude, in next 5 to 7 years, the role of central bank will diminish. The relevance will decline. It has already declined because they are not effective. In next 5 to 7 years, the central bank roles or their relevance will deteriorate significantly, and Fed will lead that. So we are looking in a complex world. Okay, now let's not get into next 5 years or 7 years perspective. If I have to talk about, since you raised the point of year and the beginning of new year, I think India is relatively more constructive on a relative basis. Okay, so what we have to look at, India has relatively underperformed. Our macro picture is reasonably good on relative basis, and absolute is also good. Okay, irrespective of rupee depreciation, which we have seen. Okay, and there is no perfect correlation now. And I still believe USD INR as a pair is speaking out. We were very early in 2018 when we have written our book and we talked about 90 levels really coming, okay? And we have touched that numbers, okay? So we are now in a phase where even I strongly believe that USD INR pair is in the final stages of peaking out. Macro picture is good, relative underperformance. Our beta has come down significantly as compared to other emerging market or developed market. We have negative correlation with these markets now. So with the background, we are in a better position as compared to global equities.
All right. Hi, Sandeep. Good morning and good to see you. When I recall us chatting on RBL Bank, where you all are one of the largest holders over there, and you all have played it well. And you all were quite positive on smaller banks as well. If you were to give us that one theme for 2026, that you all are looking at, because I'm not sure if you could name a stock, will be good with due disclosures. But, something that is out of flavor that you all believe will actually do well from here on.
So I think in the beginning, I said, the problem is in the new age companies. Okay, let's understand when last year in 2024, when we downgraded India, that's the time Indian economy or Indian stocks were doing badly and new age company was showing growth. So a lot of money got shifted there, okay? Because obviously, as compared to US, we have very limited company in that space to talk about. And the extraordinary money flow which happened is still continuing. We are not saying it's peaked out. We are in the final stages of that also. So if I have to say for 2026, I think exact reversal will start. We have to look at under-owned stocks, undervalued stock, and less hype stocks. So that is the theme which I will play and exactly reverse what happened in 2025 beginning. So we are talking about complete reversal of that trade. And this is the area where we see a lot of safety, even gradual money flow will keep you not only protected. And you have to keep in mind, the liquidity aspect has to be kept in the back of the mind. You have to, in the liquid asset, liquid stocks, you cannot be buying a very illiquid name and saying this is unless you believe these are 5 years, 10 years story. If somebody says that 1 year perspective, I think I will still give a lot of weightage on the liquidity.
So Sandeep, your view is we're in the final stages of money chasing these new age tech companies. So tell us, which are these under-owned, undervalued, less hyped companies, to your mind, which you would bet on for 2026?
So we have to look at, within the large cap, you have seen, energy companies have space, large infra space, large power companies, okay? Even some of the utilities company also we can talk about. Let's talk about within BFSI, when today insurance is one space which is slightly neglected, if not hated, but at least neglected for a while. They have not done much. Okay, things are gradually improving out there. NBFC sector, we have been very bullish for a while. We still maintain, though they have played out quite well. I think there's still space out there in some of these names. Then again, we can talk about some of the FMCG stocks also, particularly the food processing FMCG space, where we see some amount of activity getting built post GST thing. The impact is very meaningful out there. So very selective names I can talk about. We are not neither we are negative nor we're extremely bullish in the market in general. We will play with a lot of amount of safety, liquidity is a priority area. But we are constructive. We are not negative on the market as a lot of people at current level has started giving up. We are seeing even the thought process is getting capitulated. Forget the positions. So people are giving up right now. This is an area where typically I look for a buying opportunity, and we have seen that space. Like IT was a very classic example. We never have IT stocks in our portfolio for many quarters, but in last one quarter we built smaller exposure, not very extraordinary exposure, but we have where maximum analyst has given up in that space. Media noise or narrative was very negative, and you see how IT has been on the best performer in last 1 month perspective or last 1 quarter perspective.
So Sandeep, just to clear the air, insurance is a sector that's underperformed. Maybe it's coming to levels where, in fact, selective buying could be seen out there. Tech as well, which has been out of flavor. So those are a couple of sectors that y'all are gradually turning positive on after being positive on smaller banks as well as NBFCs. Is that correct?
Yeah, we have been positive on NBFC for last 2 quarters. Okay. Though they have rallied, but I think there's still some spaces there in these names where because there's a clear signs of growth, and the government is also giving a lot of focus on the space where NBFC should act because they have better reach than banks also in some of the areas. So I think you have to be very selective. I'm not saying you can choose everything, but selective company where relatively you have more secure, the collection aspect has to be good. If some management is able to showcase, they're able to demonstrate their capability. See, distribution is very easy. Money lending is very easy thing. The collection is the most important aspect which I look at, and the technology involved into it. So these are some of these companies which we own. We think we are well poised for this. That's an opportunity we look at. Even some of the smaller banks still, if something is available very cheap, because RBL is giving you a very clear indication that RBI is very open for such strategic moves. So anything which is completely neglected and good quality management and growth is there or some change can happen, I think those are the areas we will still look for identify.
Okay, so tier 2 financials, banks and non-banks, they remain an area that you're interested in. But Sandeep, to go back to the new age companies argument, yesterday I was on a panel last evening and we were debating exactly this. That no one's denying that India's consuming in a very different way and there's a lot of disruption, but how do you make sense of the price? Now, what have you made of what's going on? Look at Meesho. In 7 days, the stock doubled. Zepto is going to be listing soon. So this is definitely a very FOMO place in the market. But then will investors run the risk of missing out if they don't participate at all? Even this morning, we have, buy reports on Lenskart. I think it was Macquarie. We have buy reports on a Grow, again, a tech-enabled, capital markets platform. So the buy calls are still coming in. UBS gave a buy call on Meesho. I think it was 220 price target. Price target was already hit in 2 days. So how does one navigate this whole situation around these consumer technology stocks?
So let's understand some of the new listing first. So I'll break these companies into immediate listing impact and impact after few months or few quarters. Okay. So obviously when any stock get listed and there is a hype around that, it obviously tends to move up because there is no supply. Anchor is in a lock-in period for 1 month or 3 months, or strategic are for 6 months. So people are not able to, even promoter can't sell for 1 year. So let's understand that because of illiquidity aspect, demand supply is in your favor. So obviously price rallies. But we have seen one of the company very recently, it rallied, it doubled from our post listing. And today's from the peak is 1/3 of that. Okay. So what is very important to understand is that whether you have to play a very short-term game. If somebody can play these short-term games so effectively, because the institution becomes very difficult, you have lock-in periods, but some people are still able to play it very well. So I think, say, all the best for them. But what is very important, what we have learned, whether it will sustain. Okay, if we are clearly seeing some of the platform companies which came last year, talked about very big numbers, but in next 2 quarters or 3 quarters, they have disappointed. So I think, as a house, we always say, let's wait and watch for a few years before really taking a big call. So it's not something that we are saying that everything is negative, okay, or everything is bad. Maybe winners will emerge in next 3 years' time, or some of the winners have already emerged, and they will start looking for consolidation phase. So I think it's a very stock-specific opportunity. I will not try to say that everything is bad. But generally, valuations are very, very skewed, and we being a value investor, it is very difficult to digest some of these names, so we better to avoid these names. We are happy with that.
Any view on Ola Electric and the EV space? Opportunity, or you're staying away?
Completely staying away. We never participated in any of these names.
Sandeep, you said you built a small exposure to IT in the last 1 quarter after not owning it for a very long time.
Yeah.
Is there enough proof of a turnaround or things improving for you to increase your exposure to IT?
So, let's understand how we look at our data. Okay, when we talk about VLRT framework, valuation is important. So obviously, these company becomes very attractive, but we also look at some of the parameter like risk appetite. Okay, so risk appetite collapsed completely. And it really typically happen when everybody gives up, So we give 1/3 weightage to each component. Okay, liquidity, which was very high at the peak of the cycle, and liquidity is also generally high at the bottom of the cycle also, because that's the way the capitulation happen, and you tend to get an opportunity. So I think if I look at the combination, we are getting some opportunity. They have reached that classic inflection point, which we look in our models. We are able to identify that. I'm not saying with good amount of confidence that everything has changed or everything looks very good, but on a relative basis, they were indicating a signs of classic bottom, which we were able to capitalize and identify these opportunity. I will like to see how it's unfold in next 1 quarter. We have that view earlier also, that by September quarter, even IT stocks or these tech companies, services company, earnings should bottom out. It looks like they have bottomed out. They have delivered better than the market expectation. So let's see how it's unfold in next 2 quarters or so. But again, we always say we look at data on absolute basis, but relative data is also very important because we live in a relative world. We don't live in absolute world.
Any other sector like IT showed you signs of bottoming out or at an inflection point 3 months ago? Any other sector today which is showing you those similar signs?
Not very classic. I said insurance is one sector, which is again completely neglected. Most of the analysts have given up on these names. So, and obviously at the bottom of the cycle, all sort of challenges are more visible than at the peak of the cycle. So I think that's the way I will look at, when the best of the analysts gives up, that's a time for me to look at some of these names.
Very quickly, Sandeep, before we let you go, on pharma, how are you all placed? I recall, you all were one of the lone funds that were interested in Thyrocare, from the diagnostic space, and that worked out beautifully. I think the stock is up drastically from the time you all made your first entry. On the pharma pack, it's an outperforming sector, at least for today, up more than 1%. What do you like out there?
So frankly speaking, Nigel, we as a house has been extremely bullish. We think this is no-brainer trade sort of thing, because the way we look at, even from the tariff related challenges, we have no issues in the generic space. So Indian generic looks extremely good. We remain very constructive even on the CDMO space or the biologics space or some of the new age biologics which is emerging. Okay, so those are the names which you want to capitalize. And again, a lot of people generally get worried in pharma related, FD related warnings coming or some noise getting built up. We think as a country, this is a great opportunity. What we saw some 20 years back on the IT side, I think something similarly is already emerged for India pharmaceutical space, particularly on generic side. Overall, extremely positive and this is a grossly overweight sector for us in our portfolio.
Okay, all right. Thanks a lot for that, Sandeep. Wishing you a good end of the year, and we catch up in 2026. Wishing you and your team all the very best.
You and all the viewers. Thanks a lot.
Thanks a lot, Sandeep. Well, since Sandeep last mentioned about pharma, let's focus on the healthcare space. Ekta joins in to tell us about Max Healthcare. Ekta?
Well, yes, Max is in focus because they've announced their entry into the Pune market via acquisition of Yerawada Properties. There will be a purchase of equity stake, which is expected to be carried out in a step-up manner. In the first tranche, the company plans to acquire around 100% of Class A equity shares. There were no additional details which were shared regarding the remaining ownership structure. Now, over that, the company is going to be setting up a 450-bed super speciality hospital with an investment of over 1,000 crores on the land that they're purchasing from this Yerawada Properties company, and it is expected to be commissioned over the next 3 years. Brokerages such as Goldman Sachs have written on Max. They have a buy call with a target price of 13.25.
Got it, Ekta. Thanks a lot for that. By the way, ICICI Pru AMC, I'm getting the initial rate that's likely to list at. I think that pre-open price discovery is getting over. It's likely to list at a 435 rupee premium in comparison to its IPO price. Around 2,600 rupees odd is the probable price. We'll keep an eye out on that. For the time being, let's turn our attention to Hitachi Energy India. That's been a big wealth creator over the last few years, though it's come off a little bit from the recent peak. To discuss on the outlook for 2026 and the data center opportunities, we're now joined by Mr. N. Venu, the MD and CEO at Hitachi Energy India. Good morning, Mr. Venu, and always good to speak to you, sir. Coming to you in just a bit, just highlighting the three talking points that we're going to be focusing on. 2026 outlook across segments. Are there any risks to the HVDC segment? And the plans to increase the export contribution as well. Lots to quiz you about, sir, but let's talk about one worry that has suddenly come to the fore with regard to the street on the HVDC side of things. Is there any risk to the existing HVDC orders? And are there signs of some pricing discipline in these particular orders? Could you clarify that out, sir?
No, thank you very much, Nigel. Good morning to you and good morning to everybody. And it's a pleasure to be in this show. HVDC, as you all know, is one of a crucial technology for integrating the renewable in a large scale and bringing the power from thousands of kilometers into the city center. So this has become it used to be a niche technology, and it has now come into the mainstream technology by virtue of its huge inherent strengths in that. So HVDC technology is always, it's a very long gestation period. So there will be always challenges in terms of, ensuring that the execution timelines adhering to that, and how much, localization, all those things always played a major role in terms of, driving the execution strategies, etc. In that, as far as we are concerned, we have been consistently saying that, India needs a huge amount of HVDC corridors to ensure that the grid is stable, resilient, etc. So Hitachi Energy has taken a lot of actions and in ensuring that we invest ahead of the curve. We continue to invest in this, and then we are very successful in this year to bagging the two major HVDC projects. And as far as we are concerned, these things are on track, and then we continue to localize further as we are progressing on that. So from a risk standpoint, I think like any other projects do have risk, but we don't see any major risk in the ongoing HVDC project.
So there's no risk to the HVDC portfolio, the orders that you've already got as of now, right, sir?
Absolutely.
And you believe that Hitachi is well placed for the future opportunities as well in the HVDC segment?
Absolutely. Today, more than 80% of the HVDC components and HVDC things we manufacture, we do the localization, local engineering, local value add, and all these things will help us to neutralize any perceived risk arising out of the geopoliticals, etc. in going forward.
So HVDC, you're sounding very, very confident, and you've always maintained that in terms of just tendering, the pipeline should be 2 to 3 big, large HVDC orders per year, and you're sticking with that. Got that, sir? Let's talk data centers, because that's the next leg of growth, right? And a lot of people in the stock market see Hitachi as a play on the data center revolution that's going to be unleashed in India. And I think you've given some numbers in the conference call that maybe as much as 20% of the spends that will go in data center will go in that power infrastructure. So that could be your opportunity size. But give us some numbers in terms of what kind of data center orders are you chasing now? How big could data centers as a revenue contribution be for you, say over the next 1 to 2 years? How are the margins here? Give us more color on how you will be building up the data center part of the business.
Sure. I think I've been saying the data center is going to be another huge market for Hitachi Energy. And I'll tell you why. Because the data center previously it used to be in the range of 10 megawatt data center. And it has become a hyperscaler's 40 megawatt. When the AI came, suddenly from 40 megawatt to jump to 100 megawatt. And today they talk about a gigawatt scale. It means a gigawatt scale of a data center in a single location. It has a huge amount of opportunity. The number of transformers required, the number of grid connections required, and the number of automation required is a huge thing in that. And this is going to be pretty big, as big as it could be in going forward. Not yet, but going forward, at least in a size, if not at the HVDC at that level. I'm not saying that exactly like that. I think it has a potential to become such a big opportunity. So we have seen this, and we are again ahead of the curve. We are investing in our go-to-market strategy, investing in our portfolio, and around 10 to 15% of depending upon what kind of data center is our addressable market, and whether a hyperscaler or it's a gigawatt scale, it needs a lot of our Hitachi Energies, all the business units portfolio, right?
So what all will you be supplying? Give us some specifics. And so the transformers, what will be the size of these orders, so that we need to start preparing ourselves for these big data center orders as they are rolled out. What will be their size? What are their margins? Yeah.
The size will be every data center capex. Our addressable market is in the range of 10 to 15%.
Right.
Okay, so that's the size. Yeah.
So if you're saying these super data centers, you're saying, and the biggest of them can be 1 gigawatt. I don't have the exact numbers with me. So what is the total capex to set up a 1 gigawatt data center, out of which your addressable market could be as much as 15 to 20%?
It's all evolving. The AI-ready data centers are evolving. It's very difficult to put a number at this point in time, but the opportunity is turning out in quite a big. All I can say you that. And if you see the previous data centers, the capex is every data center, megawatt data center is in the range of 4 to 5 crores for a data center capex, not ours. So in that, our portion was 10 to 15%.
Got that. The other leg we wanted to discuss is exports. Exports is growing handsomely for you, 59% in Q2, and it's about 25-30% of your overall top line. What regions market do you think will drive export growth in 2026? And what is the revenue contribution from exports expected to be, say, 12 months down the line?
No, the exports will continue as per our strategy, as we have been consistently saying this, that exports, it used to be in the 15%, and now on an overall basis, on a year-on-year basis, is around 25%. It's in the range of 25 to 30%. So what markets we are looking at it? We are looking at markets of European market, especially the East European market, Latin American market, Southeast Asian market, some of the Middle East and African markets. So these are the play, and we have a very clear strategy. Some markets, we develop the markets together with our sales forces there. And some, we have a global feeder factories. We manufacture here and sell all over the world there. And some we use the feeder factory concept where we manufacture the components and send it to all over the factories in Hitachi Energy. So this is where it's really going well in that. But we have been saying also consistently, our main focus is the domestic market. We see a very strong pipeline, and we continue to focus the domestic market.
Well, I recall our chat a couple of years ago, Mr. Venu, when I visited your unit, and you said exports, there's a potential opportunity, services as well. And as that moves up, it has a margin tailwind as well. So, I recall that. I think the stock price was 1/5 of what it is today. But let's focus on another vertical, the battery energy storage. I think Hitachi Energy has a critical role to play in that installation, as you mentioned in the past as well. Can you clarify what is your share of the capex, as presumably batteries would be over 70% of the cost? You could correct me on the number.
Yeah. So on the battery energy storage is another a big growth opportunity for Hitachi Energy. And yes, you're absolutely right. When you talk about the battery energy storage, the batteries play a major role, and we don't manufacture batteries. So batteries, we give an option to our customers to procure, and so that we integrate the batteries. So batteries, not exactly 70%, depending again size, whether it is a utility scale battery energy storage, or those are the things. Depending upon anywhere between 50 to 60% goes to the batteries. Okay. The rest of the things is our portfolio. We have the your PCS, your inverters, all those things, and including the grid connections, etc. is our thing. So right now we are again looking at localizing the technology there. It's important that the price point, what is important for our customers to get into that. One of the ways is to localize that, and we are working on that as we speak.
All right. Final question, sir. Before we let you go, we're looking forward to chatting up with you post your numbers. We need to squeeze you a little bit, right? What's the outlook in terms of growth? What is the run rate you're looking at? And I recall you telling me that, Nigel, you'll be in double-digit margins, which happened. Could you give us a broad range we're looking at? Longer term view, sir, we don't want to know only about quarter 3. We want to know Mr. Venu's vision for Hitachi for the next few quarters, growth and margin trajectory. Please go ahead.
I think the markets are quite robust, at least in the energy transition related side. The tailwinds are arising out of the energy transitions are huge. And we see quite a good, robust growth, not 1 quarter, 2 quarter, but at least multi-year thing in there. So that's what I'm hoping, and I'm trying to drive towards that.
And margin tailwinds persist?
Yeah, we should maintain, as the growth comes, the margin should come out of that.
High double digits or mid-teens?
I want to comment on that. I told you in your own show that we reached the double digit and we reached much ahead of our own target, and we continue to drive that.
So now you want to consolidate at these levels, or you believe there is further uptick?
We will consolidate, and of course there will be some growth over a period of time.
Well, Mr. Venu, it's always a pleasure talking to you. Thanks a lot for clarifying with regard to that HVDC opportunity. No risk to the current orders. You're saying there's a big opportunity in data center as well as in the battery storage space. Good chatting with you. Wishing you a good end of 2025 and looking forward to chatting up with you in 2026 as well.
Thank you. Wish you the same.
All right. Well, time to slip into a short break. On the other side, we have the management of KFin Technologies who's waiting for us.
Welcome back. For the markets, it's picking up now. We started with a 100-point gain, and now we're up close to about 130, 140 points. But let's move on to the next corporate conversation. KFin Technologies in focus as SEBI has approved the new norms around mutual fund expense ratios. We have with us Vivek Mathur, CFO of KFin Technologies, joining in. Mr. Mathur, beginning this conversation with the big SEBI announcement, a reduction in the caps of MF expense ratios. Now, with the change in the calculation of TER, it negatively impacts, say, AMCs. And there is a possibility that AMC will pass on this burden to distributors and RTAs like you. Now, in your business, you are a duopoly. It's CAMS and KFin Tech as the major players. How will you avoid a margin squeeze? And have you had any conversation? Do you think AMCs will pass on the burden to you?
Yeah, good morning. Thank you for hosting. While there is not much of an impact on the AMCs with the final guidelines or the regulations which have come in. So, whatever the impact is, what we hear is that AMCs should be able to absorb it within their system. And we don't expect this to be passed on to us. There is no discussion with any of the AMCs or anyone has approached us so far in terms of, cutting down on the RTA charges. So I think it is more or less something which they should be able to manage, and that's what we are getting to hear. So I hope the competition is also listening the same.
Okay. So, no, while I take your point, there is not going to be a material impact on the AMC margins. There will be a slight impact. But in your understanding, they will absorb it, whatever hit there is on profitability, if at all, and not pass it on to you. Your margins should remain protected and insulated. So what is the outlook on margins? So currently, you're about 40-45%. It's declined compared to the prior year. What is your own outlook on margins?
So we maintain the guidance of 40 to 45%. 45% is when the markets are good, mark-to-market gains are there. On a steady state basis, it will be in the range of 40-42%. As we have just now in the process of integrating the new acquisition that we did, which is Ascent Fund Services, where we acquired majority stake of 51%. That company is relatively new, just achieved break-even. So when we consolidate in this quarter, Q3, you will see slight impact on overall margin, but it won't go below 40%. So we maintain the guidance of 40 to 45%. Each passing year, the margins should improve for Ascent, and therefore we will still be operating at least for the next 3 years in the range of 40 to 45%. We haven't changed that guidance since we got listed.
So 40 to 45% margins is what you will continue to chase and track. What about the IPO market, sir? I mean, it's been in such a boom in 2025. I'm not sure if it's going to be as robust in 26. Just tell us the interplay here. And what is this absolute IPO frenzy? I mean, 3, 4, sometimes in a week. What will this mean for you in terms of the third quarter performance? And are you expecting Q4 and beyond to be as good?
Yeah, as long as, the market is supportive in terms of overall corporate performance and, especially the MSME segment, which has now picked up steam in terms of coming up with IPOs. So this is a phase where we are saying, we are seeing not only just large IPOs coming through, there are all sizes of IPOs which are happening, and there is a confidence from the retail community with large number of demat accounts getting, opened up, and there is a large number of participation from the retail investors, and they do encash the listing gains, which is helping in terms of the churn in the market, in terms of money keep coming in and flowing, and then coming back to the market. So as long as there is appetite and there is no black swan event, Indian markets continue to remain stable, and they keep performing, and the participants are gaining out of it, including the retail investors. The domestic institutional investors have been sitting on cash, and they have been deploying that either through direct or through mutual funds. So overall market sentiment remains buoyant, and you don't expect abnormal gains, but there are a good amount of IPOs that we do expect to come in Q3 and balance of Q3 and Q4. So there is a good lineup that we have of the mandates that we have won, of both the large mandates and the SME mandates. So you will continue to see this traction going on at least for next 3 quarters.
So if I were to ask you to sort of try and quantify that, because this has been such a phenomenal year for IPOs, what is the extra contribution to the top line? Perhaps because the IPO itself is turning out to be a very, very strong and dominant revenue stream, isn't it?
Yeah. So see, we don't charge for taking companies to IPO. It's a very nominal amount that you will charge, a couple of lakh rupees, or, a very nominal amount that you charge for going. So our objective is to have recurring stream of revenue through number of folios. So when, a company gets listed, it becomes widely held, and the number of folios is the income. So there are 3 streams in issuer solutions that we get per folio per annum. So larger the number of folios, larger is the recurring income. Then there are corporate actions like dividend, bonus, rights issue, merger, demerger, splits. So, what you saw in Reliance Jio demerger, Vedanta, HUL ice cream demerger, so all those are additional folios for us, which means recurring revenue goes up. And that is where you see we have been getting a revenue growth of more than 20% year on year in the issuer solutions business. While on a BAU sustainable basis, a 15% growth in issuer solutions is something which is sustainable. We have been seeing abnormal growth of 20-25%, which we believe will continue for some more time till there is stability in terms of number of IPOs, which used to come out. Like next quarter we are expecting about 12 to 15 IPO mandates that we have already won to go to market. So we do expect number of folios to go up, but as you would have seen the last quarter, overall number of folios slightly came down because people did make listing gains and sold those shares and then reinvested in new IPOs. So overall, I think the growth of 15% CAGR in revenue in issuer solutions is doable, and number of IPOs will continue to see open market listings.
So 15% growth in your issuer solutions, basically, which is the IPO business. Got that. So all things put together, and I'm just to come back to the question that Rima asked on mutual funds. What I heard, behind the scenes is that the hit is going to be shared between distributor and AMCs right now, and obviously brokers have been squeezed as well by almost 2.5 bips. And no one brought up RTAs in those off-air conversations, at least with me. So we'll see how it goes. But all things put together, FY26. How are you likely to end the year in terms of top line growth?
So we are expecting a 15% top line growth in the legacy business of issuer solutions and mutual fund. While the international business will grow at 25 to 30%, the domestic AIF business will grow at about 35 to 40%. NPS has been outgrowing, market is growing at 12%, we are growing at 36%. So as a company, it will be anywhere around 15 to 17% kind of a growth.
Okay, we'll leave the conversation here. Thank you very much for joining in. 15-17% on the top line, margins between 40 to 45%. Moving on now to an exclusive. Adani Group's Navi Mumbai Airport will start commercial operations next week. That's on the 25th of December. In an exclusive conversation with Shireen Bhan, Adani Airport's director Jeet Adani talks about the airport business expansion plans, the opportunities the company sees ahead. Listen in.
6 airports through the privatization route. If the government were to put more airports up for privatization, do you still have the appetite to take on more?
Absolutely, you do? Yes. I mean, if you see the airports that have been sort of identified for the next round, there's a lot of them which have a lot of potential. And that's why we think we would be quite aggressive in the next round as well.
Which ones are most suitable for you?
I'm not going to say that on live TV.
Come on, which ones have you identified as key assets that you would like to go after?
So as of now, I would say all 11.
All 11?
Yeah, absolutely.
So that's the kind of appetite that
yes,
you have.
Absolutely.
Do you have a war chest that you're going to put to work as and when that process
so
starts
I
again?
don't think we'll need a large amount of capital upfront. What is going to be quite helpful is the amount of work we have done on the existing platform. So in terms of people, process, technology, is something that we don't need to reinvest now. So we can simply extend it now to whatever new airports that we add. We've been training our second line of people quite well to be able to extend into new airports that come in. So we don't need to go out and buy talent. We have actually grown that talent in-house. The technology that we are using to run an airport like Navi Mumbai is something that we can extend immediately on day one. And the processes was also something that we've, again, part of it adopted from outside, part of it grown in-house, and then sort of engineered it over time to be as good as it is today. Of course, it's never perfect. But that's something that we also extend to new airports. So I don't think capital is the problem. I think it's more the opportunity.
As and when the opportunity does arise, you're in the market for all 11 is what you're pointing at. You've crossed 90 million now as far as the Mumbai airport is concerned. Even if
the platform.
As the platform. Even if I look at the year-on-year growth that you've seen as far as revenue from operations is concerned, there has been an uptick there as well as on EBITDA. What's the plan now in terms of expansion? It's rumored that you're putting together a $15 billion expansion plan for the airport business.
Yeah. So, I mean, the $1 billion number keeps changing, but, at least
with the currency.
Yeah. So I'll say it in crores is, so our 5-year plan is a 1 lakh crore investment plan, which includes expansion in capacity of Navi Mumbai, refurbishment, major refurbishment in Mumbai, expansion in Ahmedabad, especially timely with the Commonwealth coming there. Expansion in Jaipur, in Lucknow. We're inaugurating Guwahati, so that's at the tail end now. And expansion at Trivandrum. So pretty much all of the assets, barring Mangaluru, is in expansion mode.
By 2030?
By 2030, yeah.
Okay.
And, from a financials point of view, we see that there's going to be two major sort of cycles. One is happening as we speak, where we'll see another jump over the next year. Then we'll see gradual growth.
Jump in passengers or jump in revenue?
Numbers, in revenue, in both.
Okay.
Because of Navi Mumbai coming in, you'll see a big jump. And there'll be gradual growth at taking 10-15% growth every year. And then you'll see a big jump in 29. In 29 will be an even bigger jump because there are a couple of things happening simultaneously. You will see large assets like Ahmedabad, Jaipur, Lucknow come online. And passenger numbers will grow quite a bit. And also that is the time where most of our city side development also comes online.
Okay.
So while the pre-leasing will be done, but the revenue numbers will start ticking in 29-30. And that will represent a massive 30 to 40% jump over the year before that. So that's how broadly over the next 5 years, the investments that we are making today is going to yield return.
Well, ICICI Prudential AMC has listed and it's had a strong debut. Straight away opened up with a gain of about 22%, 2,652. This compares with an issue price of 2,165. The investor appetite was strong. This 10,000 crore issue had seen a total subscription of more than 39 times. 3 lakh crore bids were received for the IPO. And it's a strong pop, 22% opening. This is a play on India's capital market story. In terms of asset management companies, it's India's largest by an active AUM. They manage about 10 lakh crore. But in terms of an overall size, SBI Mutual Fund is larger. But the company's profitability metrics are better than many of its peers. Now, with about a 22% uptick in open, ICICI Prudential, ICICI Pro AMC's market cap should be closer to 1.28 lakh crore, which means it surpasses an HDFC AMC, whose market cap is now at 1.15 lakh crore. So it's a good opening, steady and strong on day one for ICICI Pro AMC. We will slip into a break on that note. On the other side, Manisha Gupta will join in to talk about commodities. Stay tuned. Welcome back. Exactly a year back, crude prices were at $75 per barrel, and today as we speak, it's up $60 per barrel. Manisha is now joining in to put the spotlight on crude, and it's been a tough year for it.
Oh, absolutely. For the producers, yes. And we have seen a very sharp decline, as you said, continuing in case of the crude oil prices. It's a second weekly decline that we're looking at for the prices, and it's trading at a 5-year lows. And we have seen 22% of a decline come in for the crude oil prices. So both crude varieties, which are majorly traded in the global markets, when you look at the WTI crude, well, that is headed for a worse performance since the year 2018. And the Brent crude is headed for a worse performance as well since 2020. So sharp declines, as you said, coming in for the markets. And there have been various reasons for that as well. The major one has been that the OPEC Plus has been steadily restoring the shut-in capacity. So whatever excess spare capacity that they have been building it to the markets. This is to ensure market share and continuing to get revenues therein. And not just OPEC, the non-OPEC producers like US, Canada, etc. also have ramped up output. US production actually currently is at an all-time highs, and that's weighing onto the markets there. While you have good supplies, the demand is not so strong. There is weak demand concerns coming in from China, much of West Asia, even for US for that matter. And then it also is about Saudi Arabia lowering its Arab crude prices to a 5-year lows for the Asian consumers, telling you that their demand really seems to be becoming a concern. And it's not just the crude oil prices. When you look at the crude products, they have been declining as well. So the US gasoline prices are now below $3 a gallon, which is the lowest level in last 3 years. It has been about elevated output and flat US retail fuel consumption that has been weighing onto the markets. The US natural gas prices also are trading at a 7-week lows. We have seen record production on that one in the US markets, and the inventories are nearly 1% above the 5-year average at this point in time. Clearly weighing onto the markets there. And then you have the heating oil prices, well, that are trading at a 6-month lows. Also, when you look at across fossil fuels, coal comes into that category also, and we have seen coal prices continue to trade below that $110 a ton. Well, global coal demand is expected to weaken by the end of this decade, is the report that comes in from IEA suggests. The global coal demand will hit a record of 8.8 million tons in 2025, and that is the time that it will start peaking as well and will continue to decline by the time we are in 2030. Well, there is intensifying competition in any case coming in from the alternate power sources. That's weighing on many of these fossil fuels as well. So take a look at the crude oil prices. This also is going to be a third straight year of decline. We did see 20% of a decline in this year. It was down 3% last year and 10% down in 2023. So when you look at the overall crude prices on how they have behaved, we started this year with $75 a barrel. In the month of April, we saw a high of $82 a barrel as well. And then it saw a decline of 58.9, and we are trading at 59.7 right now. So we are really trading at the lower end of the range and the lowest level in this year as well, sharply down from the kind of highs that 2025 established there. Interesting point is now, where are the crude prices headed from here? Well, there are no bullish cues clearly from 2026 as well. Most of the global banks and brokerages are talking about lower levels from where we stand. It is sub-60 level is what 2026 could see. As per CIBC, they have the most bearish of the cues at $50 a barrel. But 55, 56, 58 is what you have EIA, Goldman Sachs and JP Morgan as well telling you. It is $60 to 62 is what Morgan Stanley and Citi have put out. 64, 65 is what BofA and World Bank seem to be talking about. So sub 70 for sure, within 60s, and some of the banks believe that below 60s where the crude prices could continue for the next year.
Okay, so pretty range bound. Maybe there is some downside risk. Let's hope pump prices in India also come down. Manisha, thank you very much for that. Get into a break. On the other side, Lata speaks to 3 top economists on the outlook for economy 2026.